Welcome to IGTV. I'm Angeline Ong, and here's a look ahead to your week ahead starting the 6th of February. First up, from Germany, we have factory orders and Eurozone retail sales. All this will give us a better idea of where Europe's biggest economy is heading, especially as many economists and analysts are pointing at a potential chip glut ahead. Turning to the rest of the world, we have an interest rate decision from Australia. The RBA expected to deliver another 25 basis point rate hike. And also we are looking out for UK retail sales, Halifax house prices from Germany, industrial production and trade balance figures from the US, along with oil inventory data from the API. And then on Wednesday, look out for wholesale inventories and EIA crude oil inventories as well. Moving swiftly on, it is the US that we kind of end the week on with initial jobless claims, of course, after the very, very strong jobs non-farm payrolls data that we've just had. And then across to China on Friday for the consumer price index there and producer prices as well. Interesting to look at that as China continues to reopen after so many lockdowns since the start of COVID. From the UK, the key data is the Q4 GDP growth rate and industrial production data, and we also get trade balance numbers. Sterling stayed close to its weakest level in 4 months, just looking at the chart here against the euro on Friday after a relatively dovish stance from the Bank of England the day before. From the US, we get Michigan consumer sentiment and the Baker Hughes oil rig count as well. Now let's turn now to IG's Josh Mahony, who's joining us now. What are the key trades? What charts are you looking at that could help traders hedge their bets or go long?
Hi, Angeline. Yeah, I think there's a couple of things that I wanted to point out over the course of the week. The first one is going to be that RBA rate decision, hot off the back of the FOMC, the ECB and the Bank of England. It seems like they want to get in on the action. This time around, we're expecting a 25 basis point hike, similar to what we've seen from the Federal Reserve. But also markets are expecting this to be the final one, so they move into their so-called terminal rate. That's a shift from the rhetoric we've seen elsewhere, where banks are warning that they could be willing to move again next time around. We could see them essentially state that this could be the end of it. So that's going to be an interesting development. And certainly we have seen in the past the RBA being willing to sort of lean on what's happening over in the US and say, well, they'll do the heavy lifting in terms of tightening monetary policy and will feel the impact in terms of driving down inflation. Well, they are continuing, but this could be the final one. So what's that going to do in terms of the Australian dollar? Well, by and large, that could weaken the Australian dollar as they have a somewhat more dovish stance compared to some of the others. And certainly coming off the back of this non-farm payrolls release that did see a strong US dollar coming into the fore, you're looking at a potential reversal here for the Aussie dollar against the greenback. We can see that on the daily time frame with the week ending in the red, 2 strong down days taking us back down in towards this key support level of 69.84. But that weekly time frame, I think, is really going to be a key thing here. Look at this big 100-week SMA alongside that 71.37 prior swing high established in August 2022. The downtrend does kind of still remain intact, but we're no longer creating lower highs. We're now creating flatlining highs. But nonetheless, if you're looking for a point where it could reverse, this is it. And certainly as the US dollar strengthens and as we look for the RBA to potentially come out with a message that this is it and we're going to see rates flatline from here on in, a breakthrough 69.83 could really end this near-term bullish trend that has been playing out and point towards a bearish phase coming into play. Sticking with the FX markets, we've got the pound coming in focus at the back end of the week with the UK jobs numbers growth number coming out. Markets expecting us to move into 0.1, so not negative territory, but nonetheless, certainly the IMF have really put the pressure on the UK in terms of what people are expecting in terms of growth and relative growth in particular. And so just how bad is it here in the UK? And we'll find out on Friday. Certainly with the dollar strengthening, the fact that everyone's now expecting the UK to, number one, have a weak economy over the course of 2023. And number two, the fact that we're now thinking, well, if the UK's got a particularly weak economy, then they're not necessarily going to keep rates elevated for as long. That means a potential dovish move from the Bank of England before some of the other central banks. and therefore we could see further weakness for the pound. That's been playing out. We're seeing this pair heading lower, and considering this comes off the back of a rally and failure to break through 124.44, I could see us weakening as we move throughout the week and start to move towards a potential double top formation here for cable.
Interesting stuff, Josh. And of course, weaker economy could mean weaker sterling, and then sterling is lower for longer, and that actually means good news for those stocks listed in the United Kingdom. So we move swiftly on to earnings now. It's a really big week, and we kick off with BP's earnings, quarterly numbers there. Traders expecting bumper profits after BP's peer Shell delivered a record $40 billion profit in 2022. Now, this was thanks largely to energy prices being elevated, as you know, due to Russia's invasion of Ukraine. Then we've got BNP Paribas full-year earnings, as well as Hertz Global. Then on Wednesday, look out for Barratt Developments, Total Energies, which comes just a day after those numbers from BP. And the House of Mouse also reports out of the United States. And Uber Technologies will be one to watch, given that the tech numbers that we've seen recently show that there's been a pause to the tech party, at least for now. And then we've got Unilever's full-year earnings, British American Tobacco's full year as well. Philip Morris and PepsiCo's earnings should give us an idea as well as to what consumption is doing in the United States. Now, remember, PepsiCo of late has been doing better and getting margins in from its snacks rather than the drinks itself. Let's cross back to Josh now to see what you're looking at as a key trade this coming week based on earnings.
Yeah, I think as you alluded to at the beginning of your piece, BP I think is going to be absolutely crucial. Now, what has been pretty interesting in this space is the fact that if you look at the correlation between energy prices and the stock prices of some of the major producers out there, there's been a divergence. The likes of crude, Brent crude, WTI has been heading lower for months now. We haven't necessarily seen that in terms of the equities, and the Shell earnings point to exactly why. A lot of the income has come from off the back of trading within the LNG space, within oil space. And so really the onus is on BP to be able to try and replicate that move and try and continue the uptrend that has been playing out over the course of the past year and some. Now, in terms of the equity itself, you can see that we did see a pullback coming into the back end of the week, but the bullish trend that has been dominating really does remain intact. We can see it on the weekly time frame as we look at this prior peak. We've broken through it now, and we're still trending towards the upside. That daily time frame really does sum it up well, because we've now dropped into this, I wouldn't necessarily say it's a steep period of gains like we've seen in the past here, but bear in mind that sometimes this isn't the environment you're looking to trade. Sometimes this can be the better environment, because if you're looking for retracements, and if you're the kind of trader like me that will buy on retracements into a good trend, it's these sort of more shallow slants that can be preferential. Let's just get this fib on and say, well, this first move, 76.4 fib. The second move, 76.4 fib. The third move, we're now coming into the 61.8, and we're starting to strengthen from here. So I'm expecting to see further strength here. I'm expecting to see similar kind of figures to Shell, but certainly this is going to be a key one to be looking out for. And really it's going to tell us whether it's justified that these equity markets within the energy space are seeing that disconnect, despite the fact that we're seeing lower crude prices. And finally, wanted to talk about Walt Disney Co. This is a really interesting stock for me, because it's the company that I remember looking at it in the past and saying, this is the kind of stock I wish I held, because it was just so consistent. And now we've entered this period where, of course, you've got question marks about, the closure of some of their parks because of COVID. Now you're seeing questions around about affordability because of what's happening in terms of people's incomes being squeezed. But we've seen a significant decline into this area of support, where we've seen a number of prior lows here from 84.71 up to 79.65. And so there's a possibility that we see the bulls come back into play from this kind of area. Certainly the past couple of months have been certainly more favourable. But we're in this sort of choppy zone that I think we'd really need to break up through the 126.48 to negate this and point towards us having bottomed out. Make sure to keep an eye out for the subscriber numbers on Disney Plus. Certainly, that's of course the area where people are pinning their hopes in terms of growth, because of the fact that the parks, by and large, it's limited how many people they're going to be able to put into their parks. But certainly keep an eye out for that. I think this is a really interesting stock that once everything's settled and people feel more confident about the economic outlook, I would expect it to be able to really prosper once again. And quite whether that's going to occur right now or whether we're going to see the fears continue about a recession in 2023, that remains to be seen.
Thank you very much, Josh. Picking up Disney Plus, they are expanding aggressively in places like India and the Middle East as well. So a good one to watch there, Disney, to see what its expansion and revenue outlook is going to be like in the coming week. That's IG's Josh there talking about all the key risk events and trading opportunities in the coming week. They include BP, Shell, of course, given the numbers coming up from BP, the House of Mouse, Walt Disney, as we spoke about that earlier, and also the RBA and UK GDP. Until then, have a great weekend. I'm Angeline Ong for IGTV.